profit and loss account, we need to identify opening and closing balance. That opening is 75,900 by balance brought down 75,900. This is your opening balance, and the closing is to balance carry forward. Just see, carry forward balance is 81,900. So this is all about balances so far. So opening and closing balance of the respective accounts are already recorded here. Let's move to identify the adjustments entry. So after these balances, we'll start to take one by one these informations. Let's take the first informations regarding the building is given. We have a 36,000 rupees of cost price of a building sold out at certain price. Now we need to identify first what is the selling price of that building. It is easy to identify that. Just check it out in profit and loss account credit side, that the 6,000 rupees were credited of profit on sale of building is given. So it means that the 36,000 rupees was a cost price, 6,000 rupees we earn a profit. That means what would be the selling price? 42,000 rupees, it's a selling price. We just write down here that the selling price of building, it comes to 36,000 plus 6,000 is equal to 42,000 rupees. Because of the 36,000 rupees a cost price and 6,000 rupees we earn a profit. So here the first we will write the profit from the P&L account. It would be transferred here, profit and loss account into bracket profit, that is 6,000 rupees. So 6,000 rupees we earn a profit, which was already recorded in the profit and loss account credit side. It would be recorded in building account debit side, correct? Now see the how much amount of depreciation was already recorded in profit and loss account debit side, that is 30,000 rupees. So profit and loss account debit side 30,000 rupees depreciation is recorded, which would be transferred from which account? It is always transferred from provision for depreciation account. So if it is recorded in P&L account debit, it comes always from provision for depreciation account credit. So by P&L account depreciation, it is how much? It is 30,000. So 30,000 rupees depreciation would be transferred from P&L provision for depreciation to P&L account. Now close this provision for depreciation account and find out the balance. 90,000 here, 90,000 here. So balance on debit side 6 and 4 10, 1 carry 7 2. So this is to be transferred to building account. Ultimately provision for depreciation, it comes from building, so building account, and this would be transferred in building account credit side. So by provision for depreciation account 24,000. Now see here, what was your selling price of building? 42,000 less provision for depreciation 24,000 minus, so balance is 12 minus 4, it's 8, 1. 18,000 rupees, it's your balance amount, and that balance amount is your realization of your building. So that means the amount realizations from building, it's 18,000, and that it comes by bank account. So bank account, it's your sale. 24 plus 18, 42. 42 minus 6, 36. So 36 is your cost price, 6,000 rupees is profit. Profit is already credit in this balance, which would be transferred into P&L account. So P&L account is already having an entry, and this amount would be considered here. So this is what all about the part of the informations which we were actually recorded. Now here the 6,000 rupees profit would be recorded in adjusted profit and loss account, as we already discussed. So profit on sale of building, that is 6,000 rupees. Then another is depreciation, that is transfer here, the profit is transferred in here. So to provision for depreciation account, and that is 30,000 rupees, correct? And this bank entry, we make a star over here. This entry would be recorded in cash flow statement under the investing activity. In the investing activity, this is cash inflow, realization of certain amount due to the sale of building. But need to close this account and find out the balance. Which side is higher? It looks like credit side is higher. So make a total of the credit side. 8, 16 and 20, 2 carry, 4, 5, 13, 1 carry. So 3,30,000 rupees. The total of credit side. Find out the balance on debit side. Let's see. 6, 4, 10, 1 carry, 9, 4, 1 carry, 2, 1. So this is a balance shortage on the building in the building account debit side. 1,44,000. It's considered to bank account into bracket purchase. Make a star here. We need to mark it over here. As I mentioned in the steps for solving the problems, we have a marking here. These two entries would be directly recorded in cash flow statement also under the investing activity. This is cash inflow because of sale of building. This is cash outflow because of the purchase of building. In that sense, the building and for provision for depreciation account is almost done. Now see the amount of provision for taxation. If you are going to see the P&L account debit side, we have a 44,000 rupees provision. It is 44,000 rupees provision for tax. So here provision for tax 44,000 rupees would be considering provision for taxation account credit side, P&L account provision 44,000 rupees. So provision for taxation during the year would be provided from the provision for taxation account credit side and transferred into P&L account debit side. Ultimately this is a non-cash item, so cash is never affected because of this transaction. That's why we added back this profit into the current year profit, as we already discussed in the fund flow statement also. The same way we are just going to do it here. Just close this account, find out the balance. Total of the credit is 50. Find out the shortage on debit side, and this is called to tax paid. To tax paid. How much is balance? Just see. 6, 4, 10, 1 carry, 7, 3 and 4. 43,400 rupees. It's a balance in provision for taxation account debit side. This is shows tax paid during the year. So company paid 43,400 tax during the year, marked over here. Because of this would be recorded in cash flow statement under the operating activities. When you already record all the changes of working capital statement, after the changes of working capital statements, we will deduct the amount of tax paid during the year from that particular part, and then we will find out the net changes of operating activity. So this would be recorded in the cash flow statement. That's why we marked it here. So now after this consideration, we'll need to identify any more changes in this P&L account also. How would be identified any more changes in the P&L account? That will be identified from the profit and loss account. So see the profit and loss account and what is your changes if the profit and loss account is concerned. Now in the profit and loss account, first part is your trading account. Cost of sales, wages and salaries and gross profit. There would be no concern in this adjusted profit and loss account, so it's over. Now in the second part, that is profit and loss account, first is operating expense, not at all is concerned. Depreciation, it's already recorded here. Provision for taxation 44,000, that is also recorded over here. Net profit, that would be transferred into the P&L appropriation account. Credit side profit on sale of building, it is already recorded here, so that is also over. Now see the third part of revenue statement, proposed dividend. So we have a proposed dividend, and that proposed dividend will be recorded, considered here in the part of adjusted P&L account. It must be paid dividend, so the dividend paid is considered the part of two entries. One, dividend paid, cash goes out, so it is already recorded in cash flow statement as a dividend paid. The another entry is to be added back into the current year profit, and that's why it's recorded in adjusted profit and loss account on the debit side, added back into the current year profit as a dividend paid. So this is your third entry in the adjusted profit and loss account. We need to just identify any more entries are remaining so far as concern of adjusted P&L account or not. No, we have already done with all these entries and all the transactions regarding the adjusted profit and loss account. Now close adjusted profit and loss account and find out the balance. Which side it looks like higher? Debit side is higher. Just try to make a total of the debit side. 9, 4, 10, 11, 1 carry, 4, 8, 11 and 19. 1,91,900 rupees total of the debit. Now we'll identify the balance of the credit side. 900. 6, 5, 11, 1 carry 8. So here 6, 5, 11, so 0, 1 which is 7, that's 1 carry 8, 1 9, 1,10,000 rupees, that is your adjusted profit. 1,10,000 rupees, it is your adjusted profit. So after the preparing of adjusted profit and loss account, we will be getting a clear-cut idea. The amount of adjusted profit is 1,10,000, but this adjusted profit is considered after depreciation before tax. After depreciation is done, because of the depreciation was already deducted, but tax paid is still not considered under this. So after this 1,10,000 rupees, then the changes of operating activities, and then at last tax paid would be deducted from it. That is your final answer under the heading of operating activities. We would be moving in the next part, that is how to prepare the cash flow statement. So up to the first stage, we will actually prepare the ledger accounts and the adjusted profit and loss account to identify what are the changes of adjusted profit so far. In the first part, we were already trying to sort out the adjusted profit and loss account as well as the simple ledger accounts. The ledger accounts, we identified the few observations, and that observations I already note down here. So these are the observations which will be recorded in cash flow statement also. So now we are preparing a cash flow statement as per the accounting standard 3. Format is already discussed at the time of the theoretical discussion. So I think so the format is with you, or maybe you understand how to sort out this particular cash flow statement. So cash flow statement, and this statement is prepared for the particular company of Om Limited for the year ending 31st March, for the year ending 31st March 2006, and that is as per accounting standard 3, AS3. These are the observations. So now see, the amount of pro forma would be prepared like this. Particular and the 2 columns for amount, and it's begin with the part of operational activities. Operational activity, the certain operational activity is already prepared in adjusted P&L account, but that still it would be considered here. So now we will start. First is cash flow from operating activities. So under this operating activity, we need to start with the first is adjusted profit. Here it is start with adjusted profit, and into bracket you can write after depreciation and non-cash items, and that amount is 1,10,000 rupees. So this is already considered here. Now we will write plus or minus changes of working capital. So we need to identify the changes of working capital affected here under this banner, and this is also to be recorded under the operating activity only. So under the operating activity, we will find out the what type of changes occurred in current assets as well as in the current liabilities. Now for that we need to observe all the current assets. So please all of you just refer your current assets. On the asset side, current assets start with the cash balance, but cash balance would be considered at last when you are actually find out the net answers of the changes in all the 3 activities, and we would be consider the cash balance at that point of time. After the cash balance, the next is debtors. Current year debtors is showing 93,000, and the last year debtors is actually showing 84,000. That means the current assets is higher than the last year. So if it is higher than the last year, it always shows that your working capital for cash flow statements is increasing, and this case would be deducted. So here we will be write the first item, debtors increase, But in case of debtors increase, current year assets increase, it would be a negative impacted. So in case of if it is negative, it will be written in the bracket, right? Increase the current year current assets is always decrease your cash flow, and that's why it's considered into bracket. Now the next is the amount of stock. Now see the stock valuations of the last year. The last year stock was 1,32,000 and the current year stock is 48,000. It means this is reverse than this. Current year current assets lower than the last year. If it is lower than the last year, it means it's decrease, and decrease in case of the amount of cash flow increases. In the case of current assets is decrease, your cash flow is increases, and that's why the stock decreases. The difference amount of stock which comes to around 84,000, and that is added. All right. Now moving to the next current assets is, that is advances. Current year advances is 4,500 and the last year advances is 3,900. This formula is applied. Current year current assets is higher than the last year, so it would be negative impacted here. Advances increases. Advances increases, and the difference of advances is comes to 600. So 600 rupees would be recorded into bracket because of its negative impacted. Now current assets are already done. Liability sides, we will observe the current liabilities one by one. Start with the first is creditors. Now see the creditors. Current year creditors is lower than the last year. Now current liability, it is actually the current year current liability. Current year current liability is lower than the last year. If it is lower than the last year, it's always negative impact because of the current liability has been actually lesser than the last year, which would be a negative impacted, and that's why it is actually considered the part of negative amount, and that is 3,000 rupees. So creditors decrease. In case of creditors decrease, it's always impacted like